Hello guys, this is fairbinaryoptions.com. So let's write on the screen the website here so that we know where we are. So www.fairbinaryoptions.com. And for this analysis today, I would like to focus on the Euro-Japanese yen. Like the name of this analysis suggests, this is a nice place to go and buy call options. Now the big questions would be why? Because if you're looking at the fundamental side, the euro related pairs are quite bearish, all of them, with the exception today maybe of the euro, Great Britain pound, but that's another story because there is a cross between two important majors. And I would say that what we have on the markets here, starting with the upside, and this is why I zoomed out the chart so you can see as many candles, or so we can see as many candles as possible, starting from the upside and moving from this moment of time, I would say that the move here to the downside is only looking like a first corrective wave in the form of wave A, like this. Let's change the color for it to be more visible. And then of course we're having a B wave all the way to the upside, A, B, C, B wave here. But this B wave, as you can see, retraces more than 61.8 when compared with the previous wave A, which makes it a suitable B wave for a flat, and it means that this is a C wave structure to the downside. And this C-wave structure to the downside, as you can see, it has a form of a folding wedge. Well, we all know that a folding wedge is rising. Okay, not really like this, sorry for that. We all know that a folding wedge is rising, and we also know that this one broke higher. So folding wedge that is supposed to rise completed. But after that, as you can see, price is forming here a contracting triangle. I mean, it tries for the highs here. It tries for the highs and fails. It tries again and fails. It tries again and fails. This is the recipe for disaster for any market that wants to advance, and it goes in the form of a contracting triangle that eventually breaks lower. It means that this is an intervening wave. It means that this is just an intervening X wave. So we have the first corrective wave being done here. The first corrective wave A, B, C in the form of a flat with a C wave failure, then an intervening X wave, and then of course the second correction. I would say that the second correction would be this one in the form of A and the B like this, and the C wave to come to the downside, either completed in the form of a 5-wave structure or about to be completed, but it should end around this level. Now, even if we are going to have the third corrective wave to the downside, it doesn't change a thing, as we need to have first a correction in the direction of the previous trend, and the previous trend is to the upside here. So all in all, long story short, we would like to buy call options. Here is 38.43. I would like to buy call options for the pair with end of week expiration date. This is Wednesday, so end of the week would be 2 days from now. So buying call options with end of week expiration date is our recommendation, or my recommendation, here on fairbinaryoptions.com. And keep in mind that all these analyses and recommendations are possible due to the help of our sponsor here, Lioneye. So make sure you go and check lioneye.com. Make sure you go and check our Binary Options Academy there with a lot of technical analysis and fundamental analysis of as well for trading binary options based on currency pairs, and keep in touch. Bye bye.